Elon Musk is secretly preparing to invest in NIO stock. Here is the inside story. Elon Musk is planning to invest in his biggest rival. Yep, you heard me right. The inside story says that Tesla's chairman is inclined towards the growth of NIO. Here is everything you need to know. Hello friends, welcome back to Finance Insights. Today we are going to discuss what NIO has planned to do with their rival and what Elon Musk has to say about the growth in this video. So make sure you watch it till the end to know everything about it. NIO is aiming for a brisk market for electric vehicles. As it brings new electric vehicles to market, while battling supply disruptions, the Chinese EV startup is eyeing a product super cycle. NIO, also known as the Tesla of China, was founded in 2014 and has since experienced rapid growth. NIO, like Tesla, manufactures luxury electric vehicles. Unlike Tesla, NIO does not manufacture its electric vehicles, instead collaborating with a state-owned automaker. NIO, Xpeng, and Li Auto are Tesla's startup rivals in China, the world's largest EV market. They also compete with the Chinese EV and battery giant BYD. On June 9th, NIO reported net losses for the first quarter that were significantly lower than expected. Revenue increased by 24%, narrowly outperforming EV deliveries, which increased by 28.5%. However, rising lithium and battery costs impacted vehicle margins. In the aftermath of China's COVID lockdowns, NIO also provided mediocre EV delivery guidance. NIO management reportedly discussed plans for a mass-market EV in the second half of 2024 during the earnings call. The long-rumored, low-cost NIO sub-brand could broaden the company's addressable market, driving growth. On June 1st, the emerging Tesla competitor reported 7,024 EV deliveries in May, up 38% from April. NIO sales had dropped by 49% in April due to stringent lockdowns that crippled the EV supply chain. However, local government subsidies are expected to boost car sales in the second half of 2022, particularly in Shanghai, the top China market for NIO and Tesla. The Securities and Exchange Commission added NIO and Xpeng to a list of foreign companies that faced delisting if their books are not open to U.S. scrutiny in May. The stock of Li Auto was already on the list. NIO has a poor EPS rating of 30 out of 99. The EPS rating compares a company's earnings growth to that of its competitors. NIO has an SMR rating of C on a scale from best to worst. The SMR rating is a metric that combines sales growth, profit margins, and return on equity. On June 9th, NIO reported a 12-cent loss for the first quarter of 2012 compared to a 49-cent loss the previous year. Revenue increased by 24%. NIO sold 25,768 EVs in the first quarter, up 28.5% year-on-year, and 3% from the fourth quarter of 2021. Despite the volatility of the supply chain and the challenges in vehicle delivery caused by the recent COVID-19 resurgence, NIO CEO William Bin Li said in an earnings release. NIO had $8.4 billion in cash and equivalents at the end of March, down slightly from $8.7 billion in December 2021. Analysis polled by FactSet expect NIO's losses to widen to 55 cents per share in 2022. Revenues expected to increase by 68% this year. They expect NIO's losses to fall to 16 cents per share in 2023 as revenue increases by 70%. Despite pandemic-related challenges, NIO more than doubled EV sales in 2021. Although sales headwinds have increased in 2022, Wall Street still sees NIO as a promising EV stock. According to FactSet, 30 of the 31 analysts covering NIO stock rated as a buy, 1 as a hold, and none as a sell. NIO shares in the United States rose ahead of earnings on June 9th after plummeting in May on delisting fears. However, NIO stock plummeted on June 9th after the startup predicted that EV deliveries in the current quarter would be slightly lower than in Q1. NIO's back above the 10-week moving average after falling to new lows on May 12th. The once-hot EV stock is now well below the 40-week average and even lower than January 2021 highs. After a drop, the relative strength line for NIO stock is improving. For the majority of 2020, it rose sharply. An increasing RS line indicates that a stock is outperforming the S&P 500 index. It is represented by the blue line in the graph. The stock has a low IBD composite rating of 28 out of 99. The rating incorporates important fundamental and technical metrics into a single score. A 21 RS rating indicates that NIO stock outperformed only 21% of all stocks in IBD's database over the past year. The accumulation distribution rating of B by NIO reflects moderate buying by large investors over the last 13 weeks. 930 funds own shares as of March. According to the IBD stock checkup tool, NIO stock has 0 quarters of rising fund ownership. China's EV competition is growing. NIO intends to sell electric SUVs and cars in China's luxury market. Both Chinese and American automakers are making inroads into this market. General Motors, Ford, and Volkswagen all sell premium Chinese-made electric SUVs to Chinese consumers. According to NIO CEO William Li, by 2030, EVs will account for 90% of new car sales in China. NIO expects to launch 3 new EVs in 2022, despite stiff competition. It began shipping its first electric sedan, the ET7, to consumers in late March. NIO intends to release the smaller ET5 sedan in September, followed by the ES7, a 5-seater electric SUV, in late August. CEO William Li sees the ET7 as a direct competitor to Tesla's Model S. He anticipates that the smaller and more affordable ET5, a rival to the Model 3, will increase NIO's customer base. NIO is expanding globally while expanding its capacity in China. It currently sells EVs in Norway and plans to expand to 25 countries by 2025. BYD and XPeng are also present in Norway, and Li Auto intends to expand into Europe. On the continent, Chinese EV manufacturers are competing with Western automakers, including Tesla. The future of NIO and EV stocks. NIO, Li Auto, and XPeng are expanding in China to compete with Tesla. According to the International Energy Agency, global EV sales will more than double in 2021 compared to the previous year, led by China. However, in order for that rapid sales growth to continue in 2022 and beyond, battery supply chains and EV production capacity will need to expand at a rapid rate, according to the IEA. However, NIO and its competitors face a prolonged semiconductor shortage as well as emerging battery shortages. NIO provides an innovative battery subscription plan. NIO essentially sells the car and the battery separately. Users can purchase NIO EVs without batteries and rent batteries for a monthly fee. They can also swap car batteries based on their requirements. NIO has 884 battery swap stations in China and has completed over 5 million battery swaps. It has brought battery swaps to Norway, putting Tesla to the test in that market. Fundamentally, NIO's financial situation is improving after debt and liquidity concerns weighed on the stock. It has reduced losses while increasing revenue, though higher battery costs are weighing on EV margins. New electric vehicles, entry into Europe, and battery innovations mean more room for expansion. However, the EV wars are heating up. While China's most recent restrictions are now in the past, the chip supply crunch continues to be a challenge for NIO. Longer term, battery supplies may pose an even greater challenge to EV stocks as a whole. Fears of delisting in the United States and a slowdown in China have put the NIO stock on a long road to recovery. Check back for updates as it remains a promising and rapidly growing EV stock. Tesla has a significant lead, which Musk wishes to expand, but of course the CEO can't help himself, and he promised to develop a non-vehicle innovation that will help the company ramp up production even more. I think the Optimus humanoid robot is the most important product development we're doing this year, he said. I believe this has the potential to be more important than the vehicle business over time. If you think about it, labor is the foundation of the economy, he said. Capital equipment is labor that has been distilled. So what happens if there isn't a labor shortage? At that point, I'm not sure what the term economy even means. So, that's all for this video. Let us know in the comment box what you guys think about it, and tell us what your favorite car brand is and why. And if you please like and share it with your friends. And if you want to watch more videos like this, subscribe to our channel and hit that bell icon. And thanks for watching.